Hello, buddy. Welcome to our TGT trading channel. We try to give you best knowledge for stock marketlets. Start video. Please subscribe our trading channel for upcoming video and updates.
The shooting star candlestick pattern is a bearish reversal pattern that appears at the top of an uptrend. It signals a potential reversal of the trend and a possible start of a downtrend. Characteristics. 1. Small body. The body of the candle is small, indicating a lack of buying pressure. 2. Long upper shadow. The upper shadow is long, indicating that the price rose significantly during the trading period but was unable to sustain. 3. Little to no lower shadow. The lower shadow is small or non-existent, indicating a lack of selling pressure. 4. Close and open prices. The close price is near the bottom of the candle, and the open price is near the top. Interpretation: the shooting star pattern suggests that 1. Buyers tried to push the price up but failed. 2. Sellers stepped in and reversed the price action. 3. The trend is likely to reverse and a downtrend may begin. Trading strategy. First, for a sell signal, enter a short position on the next candle's open. Next, set a stop loss above the shooting star's high. Finally, set a target at a previous support level or a lower price level. Important notes. The shooting star pattern is more effective when it appears after a significant uptrend. Also, wait for the next candle to confirm the reversal before entering a trade. And don't forget to use proper risk management techniques, such as position sizing and stop-loss orders. By understanding the shooting star candlestick pattern, traders can identify potential selling opportunities and make informed trading decisions. It's worth noting that the shooting star pattern is the opposite of the hammer pattern. While the hammer appears at the